Are you ready for a deep dive into the world of shiny investments? Today we're talking gold, silver, and copper, the rock stars of the commodities market. Whether you're a seasoned trader or just curious about why these metals are making headlines, stick around. We've got the latest insights on what's driving their prices sky high and what might come next. First up, let's talk about copper. This metal has been on quite the roller coaster lately, thanks to some unusual supply disruptions. Recently, there's been significant short covering in the New York traded copper futures, pushing those front contracts to new highs. The situation is pretty wild. We're seeing the most significant backwardation in about a decade. Meanwhile, the London Metal Exchange LME copper contract is trying to catch up. But what's causing these spikes? Well, it's a mix of factors. Managed money like hedge funds has taken a big position in copper, making up about 30% of open interest. This heavy investment can create a bit of a headwind. On the macro side, we've got ongoing trends like decarbonization, digitalization, and electrification driving demand. However, supply issues from South America and Panama are adding fuel to the fire. Now let's switch gears to silver, the so-called devil's metal. And for good reason. Silver has a notorious reputation for spiking and then dropping just as quickly. Right now, silver prices are hitting levels we haven't seen since 2013. It's sitting at an 11-year high, caught between the upward momentum of gold and the industrial demand for copper. The big question is, what's pushing silver up? It's a blend of industrial demand and some financial speculation. Interestingly, China has been a significant player here. Not only has the Chinese central bank been buying up gold, but there are also rumors of silver hoarding among Chinese citizens. Despite this, there's a cautious note. Silver might follow copper's trend of spiking before coming back down. So, what's the bigger picture for these metals? Let's zoom out. Gold has been the standout performer among commodities. It's currently enjoying strong support around $2,200 an ounce and is expected to climb to $3,000 in the not-too-distant future. ETF outflows have been notable, but they're expected to reverse, especially if there's a dip in the stock market. Speaking of the stock market, its performance is critical for industrial metals like silver and copper. The S&P 500 is currently 22% above its 100-week moving average, which often acts as a headwind for these metals. Plus, the VIX is hovering around 11%, indicating low volatility. All this suggests that industrial metals might struggle unless we see a stock market correction. And then there's China. The country's 10-year government bond yield is at its lowest in the database, hinting at deflationary and recessionary pressures. This could spell trouble for industrial metals, as a weaker Chinese economy could dampen demand. In summary, while gold seems set to continue its upward trend, silver and copper are facing a more uncertain future. If the stock market wobbles or China's economic troubles deepen, we might see these metals' prices dip after their current highs. So there you have it. Gold's looking like a safe bet, but keep your eyes peeled for more volatility with silver and copper. Whether you're investing or just fascinated by the market's twists and turns, these metals are definitely worth watching. Stay tuned for more updates, and remember, in the world of commodities, things can change in the blink of an eye. Catch you next time, and happy investing!